Well, good morning, everybody. It's Jeff Fitzpatrick. It is Monday, the 9th of June, 2025, and it's my weekly video log. So just to summarize what I do, I sell puts on and I buy high quality, great value stocks with low stock buying power usage and income creating potential. And as usual, we're going to take a look at the market, going to look at my stock picks and at the clubs. And this week, I've got a couple of tweaks, is probably the best way to put it, to the way that I trade. So listen carefully. But first, the market. Not that much activity last week. So the screen on the left is a week ago, and then we've got the screen on the right, which was Friday just gone. We still got the upward trend. It took a little bit of a rest at the end of the week before and then continued up. But we are heading towards Expiration Friday, which isn't this week, it's a week on Friday. So we may well get a bit of a pullback. But that doesn't really help. There's also still a bit of a gap to be filled there. Keep my eye on that too. But I don't think there's anything in there that's going to stop me trading this in this coming week. So the clubs. Now you've seen this previously, and it actually comes from the training that I did with Owen O'Malley about 25 years ago. And the idea is that when you've got a stock that's trending up, you go with it on the first green part of that cycle, and then you come out and you go back in for the second leg of it going up. And that creates more income and more price appreciation in this particular case than just getting in on the purple line and staying in. In this particular example, which is made up, it's the difference between the stock going from $20 to $30, therefore appreciation of $20, or going from 10 to 25 plus 10 plus then, sorry, 15 to 30, giving you $30 overall. So I've modified that, and now I've got this. So I decided that really it's a waste of time coming out of that first stock and then waiting until it gets into a position for us to re-enter it. So I'm not doing that. What I'm now doing is this. Go in and stay in while the stock is rising, come out again, and immediately find another stock that's a good one to enter, and then do the same again. That increases the difference between just getting in and staying in to $45 versus $20. So more than doubles the profit in that. And that's what I'm now looking to do. Of course, this is for really buying stocks. It doesn't change what I do in selling puts. So what have I got this week? Because my second change is in the selections. And just to remind you, all of the stocks that I talk about, I've checked the charts and indicators on them. I like those. I check the better investing. I want to see a continuing upward trend on both sales and earnings. I then want a ZAC score of at least 1, 2, or 3. I want positive value line comments. I want the put premium to be good, to be worth doing. I want the stock buying power usage to be low. And I want a very good annualized return on investment. That is the premium divided by the stock buying power usage. And I have a preference for expiration dates, which are at the end or start of a month rather than on the third Friday, if I can get it. Not many available at the moment. And I also like there to be a good clearance. What I mean by that is my preference is for the strike price to be below the current stock price. However, I regularly do them at the money, which is at the stock price, and I will go slightly above it if it looks okay. Wow, here's a wall of figures. Now, these are not my picks, so don't rush to sort of write these down or find them or anything. So what I've done here is I'm conscious that we've got a lot of earnings dates coming up. And if you look across the side, you can see the earnings dates. 24th of July. I've got one there, 20th of August, 29th of July, and so on, mainly in July or early August. So that only gives me one monthly third Friday expiration date in many cases. And we're getting a bit short now. We've only got sort of, well, it's probably less than 40 days, but I did this yesterday. So less than 40 days to go. So what I did is go back through the charts again, and I've looked at some of them and said, well, okay. As well as going for an expiration date that is in July and therefore before earnings are announced, what about going for a date which is a bit later? Is it going to be worthwhile? So where that was the case, and it wasn't in every one, so you can see I did think so in case of Merck, MRK, and EWBC, it didn't, so I didn't bother with it. So I looked through all of them. So I've now given myself a choice on many of these stocks, whether I want to go for the July expiration or the August expiration. Next, I looked at those choices and I removed the ones that were the least good, if you like. So on MRK there, I chose the July one. On the TBBK one, I chose the August one, and so on. So that reduced the number that I'm looking at, and I then went on to look at the ROI, the annualized ROI, and I took more trades out. So this is where I've ended up with at the end of the week. So uh, I've got in descending order, TBBK is my favorite put trade. It's got a 301% return on investment. That again is the premium divided by the stock buying power usage, and on we go down. So eventually I come to some of the bottom which are not acceptable. And there's a couple of things in there. So first of all, I've got Gap. Gap at 60% annualized return on investment is no good for me. I'm not interested. Um, but it is in a great position, and therefore I would like to get involved with it. And in this case, what I intend to do, depending on how things open today, is to buy the stock. So an alternative to selling the put and getting a great annualized return on investment, if that's not around and I like the stock, then it becomes one of those stocks that I will get into and let it stay in while it's going up and then come out of again, exactly as I just demonstrated earlier in this video. The other one that's different in there is Root. And although Root has only got a 44% annualized return on investment, that's because I've gone for a very low strike price. So the stock price at 151.73, I've taken that and I've gone down to 120. So my strike price is 120. I can get $3 for that. And what I like though is that headroom, $31.73. So the risk involved in Root is far lower. So under those circumstances, I may well go with it. We'll see. Now, I should explain that quite often things move over the weekend. So the prices you're looking at are Friday close prices, and also the premiums are those that were displayed over the weekend. When the market actually opens, we may have had some movement over the close period, and we will certainly get some different prices and some different premiums. So I will actually go back through this and just check my figures, check the charts before I actually trade anything. And I would emphasize that the above picks are just based on information as it stood on Friday before this was recorded. Things change. Prices shown on platforms can just be parked over the weekend, I think, also. So always check, check, and check again. So the course is going really well. People are really enjoying it. I've now got it sorted out so that people can join it as purely an online course. We've got the first 6 of the 10 weeks recorded and in place on there. So people joining now can go back through weeks 1 to 6 and join us live if they wish to for the remaining live sections, which are on Thursdays and they're at 3 p.m. and 6:30 p.m. And as soon as we record them, the next day they go onto the myinvestmentclub.co.uk website where people who've joined the course can actually get to them. So you're very welcome if you want to come join us. So, and the course, it covers exactly how I find stocks, how we are using the methods that I trade with to beat the world's best traders. You get permanent access to the recordings. It is only £250. You should get that back at a first trade. Thursdays, I do it twice, 3 o'clock, 6:30, so that people who are working can come along and people who are putting the kids to bed can come along earlier and so on. There's a WhatsApp group. We put questions and comments in there, so hopefully everybody gets to see the answers. And you can join at myinvestmentclub.co.uk. Now, also, if you go there and register, you don't have to then actually join the course. You have to contact me to do that, but you can watch the first session recording with no commitment whatsoever to see if it's for you. And I've got the Facebook page. Just like to keep mentioning that. If you would be kind enough to join, it's the Extraordinary Stock Trading System, and I put bits and pieces in there. If you're not already a member of one of the clubs, then you can also find out more at myinvestmentclub.co.uk, and you can put really as much or as little as you want in. So I've got members who put £100 a month in. I've got members who put hundred or hundreds of thousands of dollars in. And we don't push anybody to put in more than they can afford. We have two types of club. I've got capital growth clubs. We're running Diamond, Fortune, Tees, Sapphire, and 100th Millionaire. 100th Millionaire is only open to members of a networking group. And then I've got two income clubs, quarterly income and extra income. The difference being that the income clubs provide an income as well as capital growth. Capital growth is purely that. We're looking to grow the amount that you put in as you would savings. And that's about it for this week. So have a good week, and I'll talk to you again next week.